Okay, so the big question I always get from people starting out in this space is, what trading setup do I need? And inevitably, the image that traders have in their mind, or new traders have in their mind, is of the supercomputer server powering the 6 or the 9 screens with their real-time data feed and all of that, in their fancy trading office. And let me just tell you, nothing could be further from the truth. And in this quick section, I'm just going to share with you the couple of simple things that you need so that you can trade profitably with existing trading systems. The first thing you're going to need is a data provider, because you have to take, your trading systems will take the historical stock market data and use that data to make the decisions, to do the analysis. Now, the data provider that I recommend usually is Metastock Data. Now, I'm talking about the data feed, not the software here. And the reason I like Metastock Data is because it is absolutely, hands down, the best value data source that I've found. When I find a better data source, I will let you know. But what's amazing about this is when you subscribe to Metastock Data, you choose from one of 3 regions, the Americas, Europe, or Asia. And when you subscribe to any one of them, it's about $30 a month, and you get access to the end-of-day data for every single stock market in that region for $30 a month. And so we're talking about thousands, tens of thousands of stocks updated daily that you can use for system testing and back testing and to run systems. So, if you're in the Asian time zone and you want to trade Australia and Hong Kong and Shanghai and Taiwan and Thailand and Philippines and all of those, you get all of that data for just $30 a month. And so that value is really hard to beat. But you need an end-of-day data source. Now, I have a lot of questions about, can I use free data? And there's some really significant challenges with free data. It's free for a reason, pretty much because it's crappy. I know Yahoo and other sources provide free data, but the problem is it's free. And they therefore can't invest the resources to clean it up and make sure it's right. In free data, you're going to get bad ticks, so data mistakes that the data provider of a paid service will clean up. You're going to get inaccuracies that need to be corrected in hindsight. When trades were reported incorrectly and the data has to be adjusted in retrospect, the free data sources won't do that. And then there's things like stock splits or consolidations. Data needs to be back adjusted for a stock split or a consolidation, and if your data isn't back adjusted, then your testing results and your system and analytics will not be correct. And so free data, while cheap, doesn't represent very good value. For $30 a month, I would rather have a paid data source where I can have confidence that they've actually got data validation and error checking in place, and they back adjust the data for history and everything. So for $30 a month, you get access to all of that data through the Metastock data feed, and you've got confidence that it actually works. There's other data sources around, of course, depending on what market you want to trade. But that's the one that I use and recommend for my students because of the value that it provides, the breadth of data that you get access to. The second thing you need is backtesting software. Now, inevitably, someone will always ask, do I need software, or can I just backtest manually by looking at the charts? Now, the answer is absolutely no. You cannot backtest looking at the charts manually, because when you'll understand this as we move through the Expert's Guide to Backtesting Existing Trading Systems, but the amount of data that you need to analyze to get confidence in your trading system, to get confidence that it's profitable, is just not practical to do manually. You might be able to look at a chart of an individual stock and try some rules and evaluate, the last year or two worth of movements in that stock to see if those rules were profitable in that stock in that one or 2 year time frame. But compare that with testing your rules over the last 20 years of history in the stock market, over every single stock in the entire market, over thousands of trades. And it's just like night and day. Manual back testing is no substitute for software. Now, I know that some people will feel a little intimidated by learning new software or by learning to put rules and code into the backtesting platforms like Amy Broker. But let me tell you, when you've got a guide and you've got templates that are pre-written and all of that, that process becomes way easier. And it also gives you the ability to test far more thoroughly. So you need backtesting software. I would not recommend that anyone tries to do it manually looking at charts or in Excel or anything like that. Use purpose-built trading software for backtesting. Now, there's one more problem that a lot of trading software has that I want to raise and share with you here. The problem is that a lot of trading software will only test one stock at a time. So it'll take your rules and apply it to ABC stock and then XYZ stock, and say, well, in ABC stock you would have made X thousand dollars, in XYZ stock you would have lost $2,000. The trouble is it doesn't tell you when you combine all of those instruments into a portfolio, how does it perform? So you need backtesting software that will do that for you, because when you trade, you don't trade one stock at a time. You trade a portfolio, and you might have many different instruments on, and many different trades and many different instruments on in your portfolio, and you need to know how they work together so that you can understand your portfolio level profitability and drawdown. And something like Amy Broker is perfect for that, because it's a very powerful backtesting engine. It does it portfolio backtesting, and it also allows you to optimize automatically, so you can cover far more ground, look at much more different combinations of indicators and parameter values far more easily than you can if you're doing it manually or doing it with lesser software. And the other benefit is Amy Broker is incredibly cheap. For I think it's around $300, $330 US, you can get a full version of Amy Broker, and that allows you to backtest thousands of stocks, optimize automatically, and get full performance reports with all of the different statistics that you need to backtest the system properly. Why would you try and do it manually? I mean, if you're skimping on $300 for trading software, then I'm going to say to you, you shouldn't be trading, because you will struggle to make money, and you'll struggle to do it consistently. So you need that backtesting software. Don't try and do this manually. You need a Windows computer, because I've looked, there is no good trading software for Mac. There's a couple of systems out there, but they do not do backtesting properly. They don't do portfolio level backtesting. And so, a Windows computer, Amy Broker is a Windows program, so that's the combination I'm going to recommend. If you've got a Mac, you're going to need to be able to run Windows on your Mac using Boot Camp or Parallels or something like that. If you don't have a Windows computer or Windows with Amy Broker or a similar software installed, you can't backtest properly. And if you can't backtest properly, you won't get that confidence in the system, and you shouldn't be trading it. And then finally, you obviously need a stockbroker, because you need somewhere to place your trades. And you're not necessarily going to call them on the phone, because you want the cheapest stockbroker you can get. And the cheapest stockbroker in terms of commissions, in terms of interest costs, and you also want good execution and reliability of their platform. But don't stop there. When you're choosing a broker, you also need to think about the security of your money and the regulations that broker is operating. I mean, I've had countless interviews and discussions with traders who are looking for help because they're dealing with some dodgy broker in an Eastern European country, and their money's been basically more or less stolen from their account by broker behavior. Now, don't do that. Don't put your financial future at risk because of a poor broker selection. You want a big name broker who is regulated in a first world country that you trust, and you want to make sure that your money is held separately from the broker's operating funds. If that broker is a listed broker, you want to make sure that the share price is not tanking. Several years ago, there was a classic example of a stockbroker that went bust. I don't know if any of you remember MF Global, but the share price of that broker was tanking long before the broker went under, and yet traders stuck with them and they were using them. And then when they went under, they were stuck because they couldn't exit their positions, and they had to go through the whole unwind Chapter 11 process before they could exit their trades, and that's disastrous. So you need a profitable broker regulated in a first world country that you trust, and you need to make sure your money is somewhere safe because it's your future. And if you don't look after it, no one else is going to. So that's what you need for an existing trading system, for a trading setup. You need to have the data. You need to have backtesting software. You need a computer that will drive it, and you need a broker. You don't need 9 monitors and a supercomputer. You don't need a real-time data and newsfeed. You don't need a Bloomberg terminal. You don't need any of that. As a private trader, you've actually got huge advantages. Huge advantages. Because you can run a really simple setup, it's very low cost, and you can make an insane amount of money doing it. And so that's why trading with a trading system is one of the best things in the world. And once you've got that set up, you're in a position to backtest existing trading systems and get that confidence.